I am Priya in first year MCom B section. Today I am going to present the seminar topic on tax planning, meaning, definition, objectives and importance under the guidelines of Vinuta ma'am. Tax plan introduction about the tax planning. Tax planning is the analysis of a financial situation or plan to ensure that all elements work together to allow you to pay the lowest taxes possible. A plan that minimizes how much you pay in taxes is referred to as tax efficient. Tax planning should be an essential part of an individual investor's financial plan. Reduction of tax liability and maximizing the ability to contribute to retirement plans are crucial for success. Meaning of tax planning. Tax planning is the arrangement of financial activities in such a way that minimum tax benefits are enjoyed by making use of all beneficial provisions in the tax laws. It entails of assessee to avail certain exemptions, deductions, rebates and reliefs so as minimize its tax liability. To tax planning implies compliance with taxing provisions in such a manner that full advantage is taken of all exemptions, deductions, concessions, rebates and reliefs permissible under the act so that the incidence of tax is the least. Definition of tax planning. Tax planning can be understood as the activity undertaken by assessee to reduce the tax liability by making optimum use of all permissible allowances, deductions, concessions, exemptions, rebates, exclusive and so forth available under the statute. It's all about introduction, meaning and definition and objectives of tax planning. First one, reduction in tax liability. The basic need of tax planning is to reduce the tax liability so that enough surfaces out of profits remain with owner of it for his personal and social needs, also for future investments in his business. This is only possible by planning his tax affairs properly and availing the deductions, exemptions and reliefs, etc., which are admissible under the acts. He can succeed in doing so by adapting his knowledge about the various concessions available in the tax laws and the conditions to be fulfilled to avail them. It is a first objective. Second objective of tax planning, minimization of litigation. There is always a tug of war between taxpayers and tax administrators. Taxpayers try their best to pay the least tax and the tax administrator attempt to extract minimum. This sometimes result in prolonged litigation. Actually, the main reason for litigation lies in tax avoidance and not in tax planning. Whenever a taxpayer wants to reduce his tax liability by finding a loophole in act and the tax administrator does not agree with the interpretation of the assessee under which is demanding exemptions, deductions or reliefs, it results in litigation. Good tax planning is always based on clear words of the statute are in conformity with the provisions of the taxation laws. In such a case, the chances of litigation are minimized. Its second objective. Third objective is productive investment. A proper planning brings fiscal discipline in the functioning of a taxpayer and reduces the transfer of money from the person who has earned it by hard labor to the government for waste and sustaination and growth, which in turn increase the tax revenue of the government. And fourth objective of tax planning, reduction in cost. Incidence of tax forms a part of the cost of production. The reduction of tax planning reduces the overall cost. It results in more sales, more profit, and more revenue. And fifth objective, healthy growth of economy. The growth of a nation's economy depends upon the growth of citizens. Savings through the tax planning devices foster the growth of the economy, while savings through tax evasion lead to the generation of black money, the evils of which are obvious. And sixth objective of tax planning, the amount saved by next planning is generally invested in the commencement of a new undertaking or expansion of the business. This creates new employment opportunities in the business. For the taxation laws are so complicated that by the large taxpayers cannot plan their affairs efficiently and efficiently. Hence, such a people need the service of chartered accounts, financial advisors, and such persons join the business concern either as employees of or provide their services as private professionals. Thus, tax planning is not only the need of the taxpayers but also of the society as a whole the government. It's all about objectives of tax planning, and I'm let us explaining the importance of tax planning. No, not first. No tax planning would lead to the least benefits. Second, it is more reliable as tax evasion and tax avoidance is wrong means to save taxes. The government has provided companies with incentives in tax laws, so planner gets the advantage to use such incentives. With the increase in profits, the quantum of corporate tax also increase, and it necessitates and devotion of adequate time and tax planning. And it helps to deal with the burden of direct and indirect taxation during inflation, helps in proper expense planning, capital budget planning, sales promotion planning, etc. And seventh importance, availability of accumulated profits, reserves, and surpluses, and claiming such expenses as revenue expenditure are possible totally because of tax planning. And last importance, these days saving tax can be seen as a non repayable interest free loan taken for government. It's all about importance of tax planning, and finally conclusion of tax planning. Tax planning is a focal part of financial planning. It ensures savings and taxes while simultaneously conforming to the legal obligation and requirements of income tax. The primary concept of tax planning is to save money to mitigate one's tax burden. Thank you, ma'am. I explain tax objectives and importance. Thank you, ma'am.